Basing on what we looked at last time, we looked at the order flow, the definition of order flow. Yeah, we went ahead and we looked at the things which can make the order flow to be valid. Yeah, we looked at two kinds of order flows. We looked at bullish order flow, and we saw in a bullish order flow, we would continue to see price aiming for higher levels, breaking structure to the upside, yeah, taking out the previous swing highs, which are called the higher highs. Yeah. So again, we looked at the other kind of order flow, the bearish order flow, of which we saw that we're expecting break of structure at the downside of the trend, and we continue to see price keeps on aiming for the swing lows, which we call the lower lows. Yeah. So we saw the validity of the what the order flow. We should have a few things accountable. First of all, we should have price delivery right from the order block. You can see on a bullish side, on the bullish trend, the order blocks actually we have the last bearish candle before the break of structure. So for this case, I've been marking. Actually, I'm gonna start marking the last bearish candles. So the basic colors I basically use here is green and black. And green, these are the colors I'm using for the bullish candles, and black for the bearish candles. So we saw that price delivery depends on the order block, which sponsors the all delivery, and the order block is what leads to the breakout, of which we call expansion. So I'm gonna start to mark up the bullish order blocks, the last bearish candle before the break of structure. So our very first break of structure here we see, yeah, following the turn of trend from bearish to bullish. We had a shift in market structure here, and we had our first break of structure, of which I'm gonna be marking the order block. So this order block is the one which sponsored the first break of structure. That's why you saw price kept on running high, creating a swing high. So this is a higher high, our first higher high. Yeah. So why is the first higher high? Because now at this zone, the price doesn't have enough liquidity to continue pushing price upside. So it had to first come and retraces. Yeah. So price retraces in order to fill up the void. This void is all also we call it also part of liquidity, and also we have some external range liquidity also. So the retracement is due to price actually aiming for clearing or gaining enough liquidity in order to continue pushing price up. So we see once actually it grabbed enough liquidity, we continue to see the break of structure to the upside. So this is the BOS. So here we're aiming at taking out the previous swing highs, yeah, left behind. Yeah, so we're taking out liquidity on top of the previous swing highs and the higher highs. That's why you see on a bullish trend, yeah, we keep on forming series of higher highs and higher lows. So it reached a zone whereby price couldn't go further. This was our last break of structure, of which we had a swing low, of which it failed. Demand area here failed to hold price. So price uh, actually here we didn't have what we call a new higher high. So we entered a zone of consolidation. This all phase actually is a schematic. I would call it a distribution schematic, as we continue to see our preliminary support, and we saw the buyer's climax, and then the distribution, the U-turn upthrust, then that's what actually a few points that we find in the distribution schematic. So it's just a typical range of which we continue to see now price change in the direction, the order flow. So we were bullish, then we entered a region or a zone of consolidation. Afterwards, the intent was changed. The order flow was changed from bullish to bearish. So here we had our last point of supply. Yeah, following the distribution schematic. That's when we had our break of structure to the downside. So the break of structure to the downside, according to the bearish order flow, we keep aiming, like I said, for the swing lows and lower lows. Yeah, so price keeps on capturing liquidity, which is lying on these lower lows. So in form of capturing of liquidity, it forms what we call the break of structure. Yeah. So once price breaks structure, when there's not enough liquidity, we get what we call a retracement, whereby price actually retraces in order to clear out the internal range liquidity or filling the void, which was caused by the what? By the expansion of the breakout. So we continue to see the breakouts to the downside. Yeah, as you know, by a bearish trend, for the bearish order flow, we keep forming series of lower highs and lower low, lower highs and lower low, lower highs and lower low. So that's what we call the order flow. Yeah, the bullish and the bearish order flow, it depends on the direction where price is being delivered. Yes. So that's what I wanted actually to talk about. Yeah, the order flow is all about order blocks, bullish order blocks on the bullish trend, bearish order blocks on the bearish trend. So on the bearish trend, the bearish order blocks are the last bullish candle before before any break of structure. So the last bullish candle, we should be marking the last green candles here. So these are the bearish order blocks, which influence the break of structure to the downside. So that's what you have to know. Few things that make up the order flow to be valid. The order blocks, the ones that sponsor our price delivery, break of structure. We also have what we call, we have a break of structure, and also we keep also seeing series of break of structure as the trend prevails. So this is a clear example on the chart. You can simply see this is a bullish order flow. This is a schematic distribution schematic, and this is what we call a bearish order flow. Yeah. So here we continue to see the intent changing from bearish to a bullish order flow. You could see now a previous higher low, previous lower high. This was the previous low high was taken out. So it made what we call a break of structure because it cleared liquidity away from it. Then after that, following up, we had what we call a retracement back to the order block. So this was the order block, which actually we didn't even have the RTO here, but we continue to see a series of break of structure to the opposite side of the trend. So this order flow now changed from bearish to bullish. That's why you have now, we started to see series of higher highs and higher lows, higher highs and higher lows. Yeah, actually showing us this is another change of trend, showing the bullish order flow. So that's what I wanted to talk about, or to show, to illustrate in simple terms. Thanks. Yeah. Yeah. Bearish and bullish order flows. That's it. That's what it is.